and just going to give you my weekend review. This week I did have a couple trades that were exit trades that did end up in some losses. So sometimes a good trade can be that exit trade to prevent a further loss. I did have a bigger loss on ANET. It was having, an $8 range, and it swung up, swung down, swung up, swung down, and then it ended up surging just like the market, so I went ahead and got out. It is on watch for potential entry for short, as it does look like it's hitting an overbought area. So we'll keep that on watch for this week for overbought potential short sell on the stock itself, but we'll let the chart dictate. As always, if you guys do follow me, you saw on my Instagram and on LinkedIn and everything like that, I did post a big post about the SPY. If it closed below 275, I thought would be going into a bearish market because it would look like Head and Shoulders was setting up. But it did end up closing well above that, so it does look like it's in that bullish momentum again until the market dictates otherwise. So the numbers for employment for February were great, and that's what really boosted it up all day. The announcement came out right before the market opened, and so the SPY and all of the indexes really surged. NASDAQ hit a new high. So for now, more on the bullish side. However, if charts indicate that there is a sell-off happening and people taking profits, then go ahead, let the chart dictate what you want to do and let the price action dictate. As I posted on my Instagram, live in the here and the now and the present. So basically that's really important with trading. You want to make sure that you are in that present moment with the market and the price action. Don't try to anticipate. I think my biggest losses come from anticipating the move of a potential reversal instead of just going forward and letting the chart dictate and entering once it's given that confirmation. And that's that's part of being transparent with you guys, is letting you guys know where I see faults in myself to get better, and hopefully you guys can learn from that as well. And if you guys haven't already, here's my blog, cjandtrade.com. We've got the Modern Trader Summit that's coming up June 23rd in Orlando. Very, very excited about it. We've got the watch list as well that I give out. I send out my watch list like I do every week on the video, but I send it out that market morning by 9:15. So you have it in your inbox. You have 10 stocks to watch to see if the levels are broken. Those are ones that are moving. There's a high volume. And if the levels are broken, it's going to be a potential long or potential short. And my book as well, FMJ, Trust, Transition, and Trade. You can get that on Amazon, or you can buy it directly from me, whatever floats your boat. If you're a Kindle reader, you can get it on Kindle as well. So definitely check out the speakers as well that are trading over 40 years of trading experience. Some great speakers coming that love and trading, have a passion for it, and really want to help you succeed as well. All right, let's get into the watch list for the week. So if you I'm going to take off some of the indicators here so it's a little less messy for you. So if you are newer to trading and newer to following me, I am not a licensed financial professional, so these are just my opinions. So if you are trading, please trade at your own risk, do your own due diligence, and trade with proper risk management. So getting into the first long for the week, so I like stocks that are having a they have a higher probability of going in that direction. So CARG, the reason why I like this, it has 35.48 million in the float. This is the 15-minute chart for Friday. You can see it closed up near the high of the year. And I would say my support level would be 37.48, resistance of 38.08. If we back it out on the yearly, you see it's hitting new highs. 5-year as well, new highs. And it did have 76.26% short float volume on Friday. So that's why I like that one. Next one, we have RXII. Again, that's the 5-year chart. We'll put it to the 15-minute to draw our lines. So here, I'd say 415 would be our support level. Then we have 465, top of this candle for potential flag breakout, and then 489, the actual high of Friday. When we go to our 1-year chart, which is the daily chart, you can see that that 489 is going to pretty much play a strong resistance level here. It looks like it would be a support that then flipped to resistance, and then it could continue on up. This one's really interesting, has 1.92 million in the float and 55.18% short float volume on Friday. Next on the list is RKDA. They have 1.66 million in the float and 53.25% short float on Friday. You can see that this had a reverse. It did have a split of 1 to 20, so it really split down big time. And then it had a surgence. Once it broke this level right here on Friday from 658, it really ran up. And like I said, it was 53.25% short float volume on Friday, so the potential for another day's run up. When we go and we pull it back to the 15-minute chart, I would say 1025. If it breaks that level, wait for it to come back down and find a support level, potentially down here around 8, before it might surge up again. If it does break 11, I would look for 1160 for full-on confirmation that it is going to go ahead and squeeze above that level right there. You know, the next level would say 12, and then 1250, 1350, and then the top of this candle here, 1550. With these really low floats, you can see them run. It could go to 40 on Monday, you know, or it could go back to 6, but really wait for the market to determine what to do. TNTR, next one on the list, with 9.97 million in the float and 51% short float volume on Friday. So I would look for support level of 606 and 6.68. When we look at the 15-minute chart, you can see that was pretty much on Friday. It ran up, it broke this broke this resistance level, then it went ahead, it tested this pre-market level here of 610, broke that and really ran up, pulled back a little bit, and then closed at the high of the day. So it does have more potential for a run up. And once again, this is the yearly chart. So I would say probably some strong resistance going to happen around 7, and then 775 is our all year high. So look for that to be broken as well before it really surges. Finally, on our last for the long list, we have NETE. Now, NETE had a big up day on Thursday, pulled up, pulled back a little bit on Friday, then it broke the 15-minute range here at 215, continued up, pulled back again, found support. Looks to me like this resistance level has flipped to be a support level of 990, and I would look for resistance of 1170. When we break it out, you can see that really NETE has had a major run. It does have 1.8 million in the float and 57.39% short float volume on Friday. I might anticipate another day run up. However, it does have this, you know, bearish looking candle a little bit. It's still closed up from open, but I would definitely wait for that support level. If that does break, watch out, because these low floaters can go down just as fast as they can go up. For the shorts for the week, I would say SCG. So we'll put it on our 15-minute chart. You can see here that it's hovering $4 away from the low. They just had a dividend announcement, dropped the stock, found support at 38.87. I would look for 39.26 to be broken. When we put it on the yearly chart, you can see it's pretty much been in a downward trend. Did find the bottom for the year again at 34.76. When we pull it back on a 5-year chart, you can see that was the low for 5 years. And here all the way back, it looks like 28 would be the next level down if we do find 34.76, and that was way back in 2009. So, you know, once this breaks right here, 34.76, maybe 33.41, 32.43, and then down to the 28 level. Go to our 15-minute chart. Next one on the short list is TELL, Tellurian. So it's been in a downward trend. It looks like Friday we had it surged up and then pulled back and pulled down. Support level of 807, and then 830 for resistance. 804 was the low, 52-week low, so we can move that to 804. And once again, it's in a downward trend, down, hit a new 52-week low for 5 years. You can see we've got more room down to 6, maybe down to 5, and then all the way down here to 112. So definitely keep this one on watch. Right now, it has 62 million in the float. I forgot to tell you, SCG has 131 million in the float. Next one for short potential watch list is Fossil. So Fossil had surged up, and then now it's starting to pull back. It did break a support level that was a resistance before of $13, and now it's broken. It looks like 12.22 is the new support level and 12.87 the resistance to break. When we go to the daily chart, you can see it did have a big gap up here after earnings, surged to $18. Now it's coming back down. So if we're doing Fibonacci's, 9 and 18, $9. So that's $450 to the downside. So we have $12.50 is going to be right at about the 50% mark. So, definitely watch it. Actually, $13.50. So we've broken the 50% mark. So it could continue on down. I would say look for the first level of support down here around 11. And then after that, if it continues, it could go back down to that $9 range. After that, for a 15-minute chart, we have one of the big losers on Friday was Big Lots. So it's pulled back. Earlier in the week, we also had Dollar Tree and Dollar General as well pull back on earnings. So these are some earnings that have dropped over the week. And we have the first level of support, I would say, would be this $47.74, and then a resistance to be broken of $49. When we pull it back for the yearly chart, you can see major gap down. Now this one does have 41 million in the float, so when it bounced up pretty hard. So definitely keep it on watch. Typically with the earnings losers that gap down, you're gonna see a bit of a run up and then a continuation in the downward movement. So let the chart dictate for sure. However, I think that if that 47.74 level breaks, then it could continue on down to 47, 46, and then potentially 45. After that, it looks like they do tend to have the dividend that comes about a week and a half afterwards, so definitely keep that on watch as well for further sell-off. And just check and see. Every time it had earnings, it had a green day, then the next day was green. Here we had a red day. So what has it done in the past? It doesn't mean that it's going to do it in the future, but you always want to look left for the history of how that stock does react, in my opinion. Last one for our short list is OKTA. OKTA has 38 million in the float, so watch this one because if it does run, it could run against you pretty quickly if there's a lot of momentum behind it. So on Friday, a big gap down. It looks like it broke this level of resistance here, ran up on Thursday, pulled back down, and then it found a support 39.26, which it looks like roughly near a past support level as well, and resistance of $40, which was the pre-market high over here on Wednesday night. So look for 39.26 to break. If it does, you can see we're going to have a pullback here and possible continuation downwards. So just keep it on watch. On my long-term swing list, I do have Aura. You can see it's bounced up off of the 52-week low that it hit on Friday. So keep it on watch. If it does continue up, I would use that 52-week low as a mental stop level. So 53.76 for that. Next one is Ltp Valero Energy. A lot of the energy sectors look like they're bouncing a little bit right now. So this one did find a low on Friday as well of 38.02, on Thursday, 38.02, and it bounced up a little bit. So just use that as your mental stop if you do swing this one as a longer term swing. And next we have EQM, same thing, bouncing, and KHC, Heinz Craft Company. That's it for the week, guys. Carpe profit, seize those profits one trade at a time. Definitely check out the Modern Trader Summit, Trade Alike, and CJ Trade. Have a great week ahead.